Hey guys, welcome back to another video, and today I'm here to talk about a great stock, one that I think is one that people can get into very early. It's very cheaply valued, a penny stock, if you will, almost. And yeah, without further ado, be sure to like the video if you enjoy this content, subscribe to the channel if you want to keep seeing more. I'd really appreciate it. It helps me out, and all you have to do is press the button. And also comment down below if you guys want to see something else, or if you're enjoying it and want me to keep it up. And yeah, let's get right into it. So you can see very good day for the portfolio, up almost $500 right here, almost 4%. Very good day. I'm very happy with that. Definitely needed that. Yesterday was a very bad day, just a little bit of a rebound. You can see it dropped around 5%, and now we're only down 1% on the week. So that's good. But the stock we're going to talk about today is ticker symbol HNST, the Honest Company. This is not a very big position in my portfolio, but it's not nothing either. It's around 2%, and I think that's a good exposure to the company to have. I have 52 shares in this company. I'm happy with that. I mean, I definitely want to get it more and more over time, but for right now, I definitely will continue to build my position, but I'm not upset with the amount of shares I have. I think this is a company that, the company is this small. You can see they're down 26% in the past 3 months. It's very, very sizable. The past year, they're up 12%. Past 5 years, they actually IPO'd in 2021, so they haven't even been a company for 5 years. But they IPO'd at a price of $21 and now are worth $5, and were also as low as $1. So this is a company that has definitely had a rough past, but that's the companies that I invest in and the companies that I look for. That's my investment strategy, which has worked for me. So, I mean, if you check out their financials, it is not very impressive right now. You can see their price to earnings is negative because they have actually reported, a negative EPS in previous quarters. They've recently flipped to profitability, but their market cap is, it's sub a billion. This is a micro cap stock. It's a very small company in comparison to a lot of those big companies. But we can see over down here, it's rated a buy. I don't know if that makes you guys change your mind, but we can see that they're actually beating earnings quarter over quarter. Pretty, usual. They missed right here, but they beat right here, right here. They beat by a lot right here. That's when the company decided to jump a little bit. But you can see they flipped to profitability recently. This is a profitable company. They have been negative on earnings, but I mean they reported profitability right here. And then, they've been around there ever since. And this is a company that, you want to be in these companies when they flip to profitability. You can see right here, it was, around here, it was negative. It was, they were reporting a loss on earnings. And now they're flipping to, they're actually making money as a company. It's a great thing for a company to do, is make some money, right? So that's why I think now is a great time to invest, definitely before it's too late. We can see Honest Company is actually, it's everywhere. I mean, Honest Company is, you can see right here, they sell at Target. It says it's American digital first consumer goods company based in Los Angeles and founded by actress Jessica Alba, Christopher, I don't know how to pronounce that, and Brian Lee. And you can see that this is a great company. They have actually a really, really impressive board of directors at that company. And I believe in their brand. I think what they're doing is great. And I mean, they sell honest products where they put all of the ingredients on there. It's a very, very good brand in my opinion. I think that it's going to attract a lot of new mothers that, they want to buy diapers or wipes for their babies and things like that, of that nature. And they don't want to buy, stuff that's bad for them or has harmful products in it. So Honest Company lists all their ingredients. It's all natural. It's all, from the heart. And I really agree with the story too that Jessica Alba, the founder of Honest Company, has. She started the company out of the, goodness of her heart. This is a real passion project. And that's what I look for. It's not purely money based. Money definitely great, but it's definitely, she started the company because of, her want for natural products for, these children, and it's a good cause. I agree with those. And then, that's obviously not enough. You need a little bit more than that, and this is a penny stock. But that's where we go over. We check the financials, and they're increasing revenue year over year. This is a company that they had a revenue of 300 million, 318, dropped a little bit right here. COVID, everything dropped a little bit. But they also IPO'd at a very, very difficult time. Stores were shut down. The whole country went on lockdown in 2020. And I think that definitely, took a hit on them when they IPO'd. It was hard for people to get in stores and buy their products, and I think now they're really just catching up. We could see they increased a lot year over year right here, and then a lot year over year right here as well. And I think this year is going to be an even bigger increase. So we could see that this company is also, they're a micro cap stock, definitely around the penny stock range. $5, and it actually was trading for as high. I think their 52-week high is almost $9. So this company was a lot more. It's almost double this for a little bit, but then they slowed down a little bit. People started selling off a little bit, but I mean, this is just more of a fun stock. This is one that you can invest in. I think if you have a little bit of extra money laying around and you want to possibly get a huge return eventually. If we look at companies that are comparable to Honest Brand, we could see Walmart. Walmart maybe a little bit bigger, right? 680 billion. Definitely they have a different business model too. Walmart sells a lot of different goods, but if we look at ones like Costco sells their own, Pepsi, Procter and Gamble, definitely a really good comparison right there, and they're $84 billion company. They have a long way to go, but I think they can definitely at least be a fraction of that. Eventually. I see 10 billion, at least a billion, very, very soon. I think they'll hit the $1 billion mark as a market cap, and then I definitely see higher and higher in the future. And then Coca-Cola, Philip and Morris, definitely very similar to these companies that are trading in the 40-80 billion dollar range, are very, very comparable to the Honest Company. And I think that the Honest Company is going to attract a lot of people over the next coming years. People are becoming more aware of their health and the products that they're using for their newborn children that they love so much. If it's $3 more, they might get it just because of the love that they have for them and the want of using products that they know aren't going to be harmful for their children. And if we go over here, we can actually check out the analysis on this company. We can see that their earnings have not been very amazing in comparison to their revenue. Actually negative, and then they're positive right here, and then negative by a lot right there, and then negative by a little bit right there. So you see this company is definitely moving in the right direction, but there are a little bit of roadblocks in the way. So that's what makes it a little bit riskier than if you were just to invest in an Amazon or a Amazon, Meta, Microsoft, companies like that. And that's why my largest positions are those companies, Amazon, and then I'm starting to buy Meta. I have a lot of AMD. AMD is a company I believe in a lot. You guys know that, and that's why those are my largest positions. I believe in them the most. I think they have the most certainty around them. And Honest Company, I think it does have certainty, but not to that degree. That's why the company is a $5 stock, because people don't know if they're going to stay profitable. Very, very, it's a good reason not to buy the stock, honestly, but honestly, I think that this is a stock that can definitely go far away. We can look at their options right here if you guys just want to do a fun little play. Actually, I might buy some calls of Honest. We could see right here that if you buy a December $5 call, it's only $135, and this company, I think the company can rise 63%. I don't think that's that crazy by December. And if we look right here, actually, the Russell. Let's look at the Russell actually. The Russell 2000. Look at how Russell's down 13% in the past 3 months, down 9% in the year to date. But let's check the. We need the Russell, the small cap, because the Russell small cap. I can't find it right now, but the small cap Russell is down. I think it's down 20%. I'm pretty sure that it's down 20% in the past, or past couple of months here. And if we even just look at, one of these small cap ETFs right here, this is leveraged, but if we look at it right here, it's down 28%. Small cap ETF. The small caps are definitely getting beat up right now. If we look at SoFi, a stock I own a good amount of, we could see they've gotten beaten up, where they were at the beginning of the year. Past 3 months, even a little bit more. They're down almost 30%. And then even Honest is down, a good amount this year. And that's why I think right now is a great time to buy. This could even just be a statistical play. I think when a stock drops 26% and they continue to grow revenue, the stock might bounce back a little bit. I think that does tend to happen. So you can see year to date they're down 26%, down 28% in the past 3 months, and that's even with bouncing up a little bit today. They were down almost 34%. So I think the company definitely has an easy bounce back coming. We can see right here, actually, if we just look at the option strat, if you guys do want to just, YOLO a little option in there, for Honest, I don't think it would be that crazy. I can definitely see this company going higher than this in the near future. This is a long-term play for me. I do intend to hold Honest company for 3 to 7 years, maybe even more, hopefully more. As long as the sentiment doesn't change around the company or the numbers they're doing, then I want to hold it for, as long as I can. But I think that it's not that crazy if this company continues to show that they can be profitable and grow revenues and grow their top line and the profit margin. This company can grow very fast because of how cheap it is. The 106% is not as crazy as it seems. If Facebook or Meta went up 106% in, the next, let's call it 9 months, December, that would be a pretty big deal. But for a company like this, it wouldn't be, it wouldn't be that irregular for a company of this size to go up that much. And you could also buy some lottery tickets. I'd like to call them right here. It's $27. And if the company does go up 106%, you double your money. But that's probably, that's a little bit more risky because you lose your money if they don't go up 100%. But that's why these $5 calls, I think, are a happy medium. The company is definitely more likely to go up, 30% than it is 100, but I think both can happen. But you can make money both ways with this one. And yeah, this is just a little option play. I just want to talk about a penny stock today, a little bit cheaper. Another penny stock that we can talk about, Fubo. Fubo is definitely one that has gained a lot of traction recently. I was buying shares of this stock for $1.38, and for a while it was even cheaper than that. It was trading in the 125 range, I think. Where is the 50? Yeah, it was 110 52-week low, and this is $1 billion market cap, but they are a very, very small stock, $3. And you can see they've risen a lot in 2025 amid their lawsuit with Disney. This is a company that spiked a lot after that, and because they won the lawsuit with Disney, Disney agreed to partner with them, and now Fubo is a partner of Disney. I think this is a company I'm up a lot, but I barely had any money in it. It's not, excuse me, it's not a big position in my portfolio, and I plan to build it over time, but it's not a company that I'm dying to add to. But if you look at this company, they are negative in earnings, but look at what they're doing with they're beating earnings quarter over quarter over quarter over quarter. This is a company that's definitely going in the right direction. They're beating it not by a small amount either. These are sizable beats in earnings. They beat by almost 9 cents per share. So yeah, this is a company that is definitely risky. Same with Honest. They're both they're penny stocks. And there's companies that if you have a little bit of extra money, if you want to put, I'd say 1 to 3% max of your portfolio in them, then go for it. I don't think that can do any harm. I think it can do more good than harm, putting 1 to 3% of your portfolio in these small penny stocks. Especially Honest. I believe in Honest a lot. I don't see the harm there. I think that these are definitely companies that you should have exposure to. Don't go put all your money in there, but if you can afford to put a little bit in there, I think these are the companies that have amazing returns, and especially because Honest is a newer company, I think that they can definitely do big things. If we look at a similar company as Honest, let's look at Procter & Gamble, who, or Procter & Gamble. Let's look at when they IPO'd. It was a while ago, but Procter & Gamble IPO'd. They kind of the same thing happened. They IPO'd for 50. They dropped all the way to 28. Honest dropped even more than that. So maybe this is even better. But now they're at 28, and then since the 28 when they dropped in half, now they're worth $167 per share. So they've definitely gone up a lot, and they pay that 2.4% dividend. And if you were collecting that since the year 2000, you've made a pretty penny off of Procter & Gamble and their dividends. And then we could look at some other companies like that too. But the bottom line is that these companies tend to do very good over time if they continue doing what they're doing. And we can look at the other companies that they compared them to, which I think are great comparisons. We can see Philip and Morris. Let's check that one out. Let's see. These are also companies that pay big dividends, though. The companies that pay big dividends, Honest isn't like that. They might be eventually, but right now they're not. They're more of a growth company. But we could see Philip and Morris up 200% all time, and they pay almost a 4% dividend. Oh my gosh! So yeah, if you've been in Philip and Morris since 2008, you've made a good amount of money off of that dividend. That's a very nice dividend right there. But these are two companies that are very comparable to Honest, and very Honest can honestly do what these companies are doing right now, and it wouldn't be that out of the question, out of the ordinary. And I think that it's definitely something to look into if you're an investor in the market. And that's going to be all for today, guys. Thank you for watching. Be sure to like the video if you enjoyed it. Subscribe to the channel also. It helps me out a lot, and I'd really appreciate it. Also, comment down below if you guys want to see other things or what you guys think about this company, and I'll catch you in the next one. Peace.